Let me start with a few completely normal financial questions. Will the Federal Reserve cut interest rates this year? Will Taylor Swift attend the Super Bowl? Will aliens be confirmed by the US government before 2030? And my personal favorite, will Jesus Christ return before 2027?
Because, yes, those are all real things people are betting on. Not in Vegas, not on DraftKings, but on something called prediction markets, websites that look like financial exchanges but feel suspiciously like gambling apps your friend checks immediately after losing $400 on the NBA playoffs. And somehow, they're legal. Today, we're talking about the strange, rapidly growing world of prediction markets, platforms like Polymarket and Kalshi that let anyone bet on real-world events. They claim to be the future of forecasting. Critics say they're just sports gambling wearing a suit and tie. And right now, they're handling billions of dollars in bets every week. So today, we're breaking down what prediction markets actually are, why Silicon Valley is obsessed with them, the massive regulatory fight happening right now, and whether these platforms are brilliant forecasting tools or just casinos for economics nerds. Prediction markets are actually very simple. You buy a contract that pays $1 if something happens. That contract trades somewhere between 1 cent and 99 cents, and the price represents the crowd's probability estimate. If a contract costs 60 cents, the market thinks there's about a 60% chance the event will happen. That's it. It's basically the stock market, except instead of buying shares in Apple, you're buying shares in whether the Denver Nuggets win tonight, or whether the Fed cuts rates in June, or again, whether Jesus returns before 2027, which, for the record, is currently trading at about 2% probability. So apparently, traders are slightly more confident in the Nuggets making the finals than the second coming of Christ.
The important thing here is that these markets claim to reveal collective intelligence. Economists call this the wisdom of crowds. The idea is that if thousands of people each have tiny bits of information, when you combine them all through betting, you get surprisingly accurate predictions.
And weirdly, there's evidence this actually works. Prediction markets are not new. People have been betting on real-world events for centuries. In the 1800s, Americans bet heavily on presidential elections. By some estimates, election betting markets handled more money than the stock market at the time. But the modern version started in 1988. 3 professors at the University of Iowa launched something called the Iowa Electronic Markets. They created a tiny financial exchange where students could trade contracts based on the presidential election. It was mostly an academic experiment. But something weird happened. Their market predictions ended up being more accurate than political polls. Over and over again. Economists loved it. The theory made sense. People with good information would bet. People with bad information would lose money. Eventually, the market price would settle on the best available estimate of reality. In other words, truth discovered through gambling, which is either brilliant economic design or the most American idea ever invented. Fast forward to today. Prediction markets have exploded. 2 platforms dominate, Polymarket and Kalshi. Both are based in New York. Both were founded around 2020, and both are now worth billions of dollars. Kalshi recently raised money at an $11 billion valuation. Polymarket is estimated somewhere around $8 to $10 billion. And the activity is enormous. These platforms are now handling billions of dollars in trades every week. During Super Bowl weekend 2026, Kalshi alone processed over $2 billion in bets. To put that in perspective, that's rivaling the scale of major sports books. Except the bets aren't just sports. People are betting on elections, interest rates, wars, corporate decisions, celebrity appearances, movie awards, crypto prices, weather events. You can even bet on things like, will the Chipotle CEO say carne asada on the earnings call? Which means, somewhere in America right now,
They're traders analyzing fast casual restaurant transcripts, like they're hedge fund analysts.
And honestly, that's kind of incredible. Silicon Valley absolutely loves prediction markets because in theory, they're not gambling, they're information engines. Supporters say prediction markets are the most efficient forecasting tools ever invented. Instead of polls or expert opinions, you get real money predictions, which means people have incentives to be right. And investors see massive potential. Kalshi has received backing from major financial firms. Institutional trading companies like Jump Trading and Susquehanna provide liquidity. Google Finance now displays prediction market odds. Even major sports leagues are getting involved. The NHL signed deals with prediction platforms. And big sports books like DraftKings are exploring similar products. Which makes sense, because if people are already betting billions of dollars, someone's going to build the casino.
This is where things get messy, because prediction markets insist they are not gambling. They call themselves event derivatives exchanges. Basically, financial markets where people trade contracts tied to real-world outcomes.
And one company in particular, Kalshi, went through the official process to get approved by the Commodity Futures Trading Commission, or CFTC. That means the federal government currently regulates them like futures markets, which is how they can legally operate in all 50 states, even states where sports betting is illegal.
But many regulators think that's nonsense. Nevada's gaming authority sued them. Tribal casinos are suing them. State attorneys general are suing them.
Because from their perspective, if you're betting money on the outcome of a football game, that's sports gambling. Even if you rename it Event Contract Number 4321. One critic summarized it perfectly. If it walks like a sports bet and quacks like a sports bet, it's probably a sports bet.
And honestly, that's a pretty hard argument to refute.
Prediction markets also raise some uncomfortable questions, because people aren't just betting on sports. They're betting on things like wars, terrorist attacks, assassinations, political coups.
Which creates a strange moral dynamic. If you bet that a war will start, technically you profit when bad things happen. There have also been accusations of insider trading. For example, one trader reportedly turned $32,000 into $400,000 by betting on a political overthrow shortly before it happened. Was it luck, or did someone know something? Nobody knows. And that uncertainty makes regulators nervous.
There's also a broader cultural concern. Some economists argue this trend reflects financial nihilism. Younger generations feel locked out of traditional wealth building. Housing is expensive. Markets feel rigged. So instead of long-term investing, they speculate on bizarre event contracts.
In other words, we may be turning every real-world event into a financial asset, which is either incredibly efficient or slightly dystopian. Right now, prediction markets are in a legal gray zone. The CFTC claims it has authority over them, but many states disagree. Congress is already considering legislation to limit certain types of markets, especially bets on things like war or terrorism.
So the next few years could go in several directions. Prediction markets become a major part of finance. They get restricted to a narrow set of economic forecasts. Or regulators decide they're just gambling apps and shut them down.
But one thing is clear. The concept is powerful. Turning beliefs into prices can be incredibly informative. The problem is, once you let people bet on anything, they will absolutely bet on everything. So prediction markets might be the future of forecasting. They might be revolutionary information tools. Or they might just be the world's most intellectually dressed-up casino. Either way, we're now living in a world where you can trade contracts on inflation, interest rates, the Super Bowl, global conflict, and, apparently, the return of Jesus Christ. Which means if the apocalypse does happen, some guy on Polymarket will technically be able to say, "I told you so."
And honestly, if that happens, I hope he at least hedged the position.